Thanks for joining us on the news at 1. Let's take a look at your market news now. Most Asian shares fell today, weighed down by a plunge in high-flying tech shares on fears that a long boom in microchips may have peaked. Japan's Nikkei was the exception. It rose to a 3-week high as gains by financial stocks offset weakness in tech shares following a drop in their U.S. counterparts overnight. The Nikkei ended 0.6% higher. Hong Kong shares ended lower, dragged by tech shares and reflecting fears in the region that the boom in demand for electronic components has peaked. The Hang Seng Index ended 1.5% down. Mainland China stocks also fell, pressured by the selling of property and financial shares as investors took profits in sector leaders that had stellar gains this year. The Shanghai Composite Index lost 0.61%. On Wall Street yesterday, the Nasdaq Composite Index posted its biggest one-day drop in more than 3 months. Investors fled high-flying tech stocks and shifted to banks and other pockets of the market that could benefit from improving economic conditions, lower regulations and taxes, as well as higher interest rates. Gains in financial, industrial and healthcare stocks boosted the Dow Jones Industrial Average, giving the blue chip index another record closing high. The Dow lost 0.4%, the S&P 500 ended flat and the Nasdaq dropped by 1.2%. Now for more on the markets, we cross our markets anchor, Nompumelelo Siziba. She's standing by at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, global markets seemingly mixed today, although the all-share index is very much in the red. It's down by about 0.6%, with industrials and mining counters in particular weighing down on the bourse. On the currency front, we do see the rand fairly stable, although there is somewhat of a downward bias. We have seen it lose a few cents relative to the US dollar on the New York close. And globally, markets today are going to be looking at what happens in terms of the OPEC meeting that's taking place in Austria's capital, Vienna. They're meeting with significant non-OPEC producer, Russia, to determine whether they should continue their oil curb through to the end of next year and beyond. Market very much uncertain as to what will be decided. Some people even thinking that they might actually cut their production cut while still extending it, as some nations have suffered a little bit due to having to cut down production. So we have to wait and see what happens there. Markets eagerly looking at that. Let's take a look at the indicators. Owen Nkomo, he's MD at Nkunzi Wealth. Thanks for joining us, sir.
Thank you for having me, Nombu.
Good stuff. Let's talk about the US and Asian markets. There seemed to have been a bit of a big sell-off there on the tech stocks in particular. Is this a realization that perhaps a peak is being reached in that particular sector, or it's just players taking profits ahead of the festive season?
Look, I think I am on the side of caution, and I say that the market in the tech space globally, not just in Asia, has done amazingly well this year. And I do think people are taking profits off the table. You know, we've got so many things happening, so many stocks whose prices we can't justify why they're trading where they're trading. You know, we're talking just before the show about Bitcoin as well. You know, people have put money into tech-related stocks. People have put in quite a lot of cash into the so-called fourth industrial revolution stocks as well, which you know has pushed these price earnings of these companies to very high levels. And I think I'm not surprised to see people taking profit of some of these names.
But going forward, the underpin, the fundamentals, are people still going to want to demand these technical related stocks?
Look, I mean, if those stocks do produce something or are useful in the economy or in the communities where they operate, or they're delivering a certain change in the environment, which we are increasingly becoming weary of these days. You know, we're talking about a Tesla, which is also being questioned at great lengths. You may to an extent say that there's justification in some of the valuations, but to use Tesla once again as an example, people are arguing whether or not they're going to become a company that makes profits for its shareholders Or are we just investing in the hope that someday every single car in the road is going to be an electronic car, and Tesla, for example, is going to be a leader in the space? And there's a whole lot of other tech companies we could talk about that whose prices have been pushed up aggressively. You know, that the justification, if you analyze them using the normal way of analyzing companies, you need to change your game plan first to understand why these valuations are what they are. If you look at our own Naspers, for example, it's trading at an all-time high, close on $4,000. And, you know, it wasn't anywhere near there about a year ago, but the momentum was there. And with non-believers as well saying the stock is not going to go to 3,000, and it hit 3,000 in a few months. It's now pushing to us reaching 4,000. So sentiment still favors some of the tech stocks. So as long as there's value in those businesses, I do think that the industry is going to continue to invest in them.
It's interesting that Naspers is doing so well, and of course we know that it's heavily supported by its stake in Tencent, the Chinese company. But we know that what's been topical of late is multi-choice and its conversations and agreements with the SABC around digital television and so on. And of course, this is very controversial. I wonder what it would mean for multi-choice if it wasn't under the umbrella of Naspers had this taken place.
Look, I mean, that's a tough question to ask, really. But I think the general sentiment that, you know, picking up is that the market is embarrassed that a company like Naspers has got a subsidiary that's involved in things like that. You know, the discussion as well around AN7 and the relationship with Naspers as well has also been asked, you know, relative to the amount of cash that's being paid to AN7. And we haven't had Naspers come out and aggressively make their stance known around that. It's now a reputation story. But the bottom line is that Naspers is still valued based on the price of 10 cents in Hong Kong. And if that keeps going up, I think the contribution of Mnet to Naspers' total numbers is relatively minuscule relative to what they make in Asia. So it's a moral issue, but I don't know where that's going to land. You know, people are saying, look, I have a problem with this morally, but I'm still making money on the stock that I've invested in, which is Naspers.
I'm worried about our time. OPEC is meeting today in Vienna. They're going to be talking about those whether they're going to extend the production cuts. What do you think they will do? And ultimately, does it make a difference?
Look, it definitely does. I mean, if the production cuts are stopped, then you have a chance at seeing the price of oil coming back. But if they extend it, then you've got this elevated oil price staying at these levels, which is not great down the line for those emerging markets that import oil and have currencies that weaken. So one does hope that, you know, there's no extension to this production cuts. The price of oil is $64. Is definitely not good for South Africa. I think in December we'll get a fuel price hike.
Okay. And very lastly and very importantly, political commentators suggesting that the ANC elective conference may not take place. If that doesn't happen, obviously it creates more uncertainty for South Africans and from the perception of ratings agencies and market players. What does this mean for the Rand going down the line if we're not sure?
Yeah, look, I guess we've learned a big lesson this week around the Rand. You should never bet against the Rand on bad news. So if the conference does not happen, I mean, who knows? I mean, I've been chatting to a few guys involved in the ANC that say, look, I mean, there's been a few glitches, but the conference will carry on in December as planned on the 16th. And we do hope it does carry on, so we've got closure at least on one element of the country, which is very important to everyone going into next year. We need to know who's going to be leading the ANC and therefore who's going to represent the ANC in the elections in 2019. As investors and investment managers, it's important for us to get some certainty and closure around that. Certainly, if there's no closer to it, then it's a problem. I think the ratings agency may start to think otherwise about the 90-day period they've given us to sort ourselves out, especially on Moody's. Indeed.
Well, more to ask, but not enough time. Thank you so much for your insights, as always, Owen. Well, we go straight back to studio to Nzinga.